Hi traders, in this video we're going to be looking at the Moving Average Deviation Indicator. In this video I'm going to show you how you can use this indicator to help you capture moves like this one for over 600 pips. Okay, as you can see I already have the Moving Average Deviation Indicator placed here on my chart. It's displaying this green line and orange line along with the grey line here. You can customize the size and the color of the lines accordingly. I'm using the MT4 trading platform. You can find this indicator for this platform by just doing a quick search online or for your own choice of trading platform. Okay, this strategy you can also use with standard moving average or simple moving average, exponential moving average, weighted, smooth moving averages. Okay, you can also use multiple moving averages, slow and a fast, perhaps like say a 14 period with a 35 period moving average and just look for crossovers. Okay, this is a Euro Australian dollar 1 hour chart. I prefer the higher chart time frame, so 1 hour and the above 1 hour, 4 hour, daily, weekly, monthly, simply because they contain more price data and therefore I find signals tend to be more reliable. Okay, and that applies to technical indicators, price action, support and resistance, trend lines, so on and so forth. Also, with the higher term chart time frames, it means less time chart watching. You can capture big moves like these for hundreds of pips without needing to chart watch all day long. Okay, so the first thing we do is we draw a support. So if we go back here, you can see this market was in this choppy situation over here. Had a resistance around here somewhere. Okay, and then the support was just down here, down and around here somewhere. Okay, and the price was consolidating in here. Then what happened is we had a breakout of this resistance line to the upside and a nice trend there. Market started to make these higher lows. We're in a clear upwards trend. So what we would have done is we would have used the moving average deviation indicator here just to help us see the direction of the trend. It's not necessary. You can just simply draw a line as I did there to mark your higher lows or your lower highs in the downtrend. But the purpose is, first thing, to determine the trend direction. As I said, have a nice upwards trend there. This was the longer term resistance that was breached here, but if we just look in here, we did have a shorter term resistance as well. See this level here tested multiple times. Okay, and then eventually we had a breakout above, and then this resistance line became support. Okay, we don't need any magic indicators to tell us that. We can just look at the chart and see exactly what is happening by reading the price action. Okay, my preferred method of trading rather than relying on potentially lagging or repainting indicators. So what happens? We have a breakout of that resistance. That would have been an aggressive entry. Okay, you can just trade the breakout or wait for the resistance to then hold up as support, and then you see these nice bullish candlestick patterns here. You've got a 3 inside out pattern there, which is a bullish candle followed by a bearish candle, followed by a bullish candle that's at least 50% of the bearish candle's body, and another bullish candle that breaks above the initial bearish candle. Okay, so strong bullish signals. Again, the higher lows as well. So we could have taken that breakout or pullback initially here, or then you could have even this pullback between this silver moving average line here. So you see a pullback in this zone here, then you can just wait for breakout. There's no coincidence if I zoom in for you there. No coincidence, there's a big breakout candle to the upside there. Traders are watching this level. Okay, strong resistance. As I said, 1 hour chart is held up, you know, for around 6 to 8 hours. And there's a big breakout there. Traders are waiting for that. We can see that the market's making these higher lows. We're in an uptrend. Okay, the moving averages are pointing upwards, so that's a possible entry there. If we just zoom out. Okay, this entry here, I would say this is the aggressive one, this first one here. Then waiting for a pullback is maybe a medium entry, and then you have a more conservative waiting for a breach of this resistance here. Okay, and then a pullback. So once that's breached, you see that pullback there. Okay, hits the resistance, pullback, and then the breakout here. This resistance then becomes support and a continuation. So that would be a conservative entry there. Okay, so let's say we took this one here. Once we see price break out of this zone, see the clear uptrend, weighted moving average. We can put our stop loss below the low here, so around 15 pips, which is relatively tight for the 1 hour chart time frame. And profit potential on this trade of over 500 pips. What I would have done is I would have used a trailing stop. So as price increased, I'd first move my stop loss to break even and then just move it below prominent lows on the way up. So like there and there and there and there. And even if we're taking out here, we still caught the majority of that trend. And you can of course close part of the position on the way up. One thing I don't want to do is I wouldn't, have a 20 pip stop loss and see price move up to here 60 pips and just exit the position because you just end up leaving too much on the table. Okay, what I want to do is I want to cut losing trades short and let winning trades run. That way, even if we do have a few losses, even consecutive losses, we just know eventually when we capture a big trend like this one, we can make hundreds of pips to make back them losses and then some more. Okay, if you did miss this trade or you did exit too early, you don't need to force trades. Okay, there's plenty of trading instruments you can use. You can trade Forex, cryptos, commodities, indices, stocks, etc. Other chart timeframes as well. You can look for opportunities. There's always going to be trades there, but you can re-enter as well. So you just wait for the next pullback. Okay, as I said, we had this pullback here and then a breakout around here. Okay, then another pullback here and a breakout to the upside there. Okay, and there's more of a deeper pullback here, but nonetheless, still strong level of resistance and a big breakout to the upside there as well. So the ample opportunities to enter into this trend by just waiting for a pullback into the weighted into the moving average deviation channel there. The indicator, basically the moving average indicator here, what it's doing in this instance is just filtering the trade direction so that we know that when they're both when the silver is above the green and they're facing an upwards direction, we're looking to place buy trades to go long. And when they're both facing downwards, okay, and the silver is below the green then, or below the gold, whatever color depends you're using, we'll look to take short or sell trades only, okay. What you don't want to do is you don't want to enter in too high up. You definitely don't want to buy at the high. Okay, want to try and get in as early as possible just to maximize the move as much as possible. Don't always need to do your support or resistance horizontally. Okay, it's still valid. Nice W chart formation there, breakout to the upside, resistance comes support, continuation. Okay, again, nice pullback there, breakout, and still plenty left in the move, though as I said, you don't want to end up buying too high. Okay, another useful way to use this indicator is just to avoid trading when it's all choppy like that, when they're just crossing. I wouldn't buy and sell every time they cross. Okay, there's no clear trend direction. You're going to want to wait for an established trend breakout like this and look to ride the trend as much as possible. Okay, so we use the indicator to tell us the trend direction, and we time our entry on a pullback and a breakout. Good money management, obviously good trading discipline and emotions. Don't let fear, anger, and greed get in your way. Don't revenge trade. Don't have fear of missing out. Okay, don't overtrade. Yeah, and you can capture some big moves like this one with a very basic strategy. Just wait for the price to pull back in this channel here, and then for a breakout. Okay, another way you can trade this is just to trade the crossovers in the direction of the overall trend. So you see when the market's making these higher lows, okay, you wouldn't sell. So you wouldn't sell when it crosses below, but you could look to buy when it crosses above. Okay, but for me, I'm going to trade breakouts of resistance in an uptrend or breakouts of support in a downtrend. I look to maximize the moves as much as possible. Okay, you can also do this, as I said, with the moving average indicator or a combination of moving average indicators. Yeah, you don't need any other indicators, just a good knowledge of price action, candlestick patterns as well. Just reading price. There's a reason that candlestick patterns have been around forever, basically, because they tell you what the market's doing at any given time rather than in hindsight. Okay, appreciate you watching. If you can like and subscribe, that would be great, and I hope to catch you on the next one. Take care.